what if your next loan wasn't decided by a banker, but a system that knows you better than your credit score could ever? In a world powered by data and intelligent technology, lending is getting smarter, faster, and more personal. Welcome to this episode on All Things Altron FinTech with our seasoned guest. Today we get to explore the future of credit, how digital innovation and advanced analytics are reshaping who gets access, how much, how, and why the shift could be redefining financial fairness or deepen digital divide. Buckle up because we are diving into the smart lending revolution. Welcome, Ahmed. So for those who don't know who Ahmed is, can you just give us a quick intro and who you are, what do you do for Altron FinTech, and some fun facts about you?
I work in the dev department, essentially. I guess it's IT, but specifically in the software development side of things. We handle all the IP for Altron FinTech new pay businesses and the Delta businesses, so the lending portion of the businesses, right? The lending processing portion of the businesses. We don't physically give out loans in our company, but we do process loans, requests on a bunch of other merchants and providers out there. So all of the software that enables that, that's the space that we work in. We don't retail any software. So everything we sell or every piece of software we give out into the market, we generate ourselves.
So you're the money guy.
I don't know if I'm the money guy. I'm the product guy, I think more. The money guy is Ahmed Gani. That's for sure.
So now, can you just give us a brief summary or description or when we are talking credit in this context, right?
Mm-hmm.
Credit has traditionally been the cornerstone of financial services, but how are new data-driven approaches reshaping the lending landscape, especially in South Africa and emerging markets?
Okay. So the margins in the credit lending space, especially in the informal sector, is very tight, right? In general, it's small businesses, small to medium enterprises opening up like a micro lending or loan shop or any kind of like a credit providing business. This can be in lieu of services, or it can just be a microloan in the event of cash for money, cash for a repayment later. These, without the microlending industry in and of itself, I think the financial system would have been hard pressed to actually keep going in this country for a while, because these are all basically unsecured and in the informal sector that people didn't want to traditionally lend out to. So the banks and all of the big players didn't really want to lend out to that. So they filled the gap. And when it comes to these businesses, they don't have the big databases and the big systems and all of these, heavy weighted, capital intensive systems that are run by all of the big lenders. So they are smaller. And we stepped into that gap many years ago to say, okay, how do we provide this at scale in a way that's cost effective, that can enable these businesses to perform, right? So we did that, and that continued to be the case. And now data and, or rather the level of data out there and the enrichment of that data has kind of come to the fore in the last, few years, because the industry has grown with it. So now data is the hot new thing. That's kind of, I guess, like shaping what type of credit you give out, how fast you can give out that credit, how much information you have before it comes into the specific shop looking for a loan. And some of it's not even face to face. So that data plays a big role in that space in terms of speed, quality of the person that's actually getting the loan, your chances of repayment, that kind of thing.
Because when I need the money, it is an emergency. So I need the system to act fast.
Yeah, that is generally the case, right? I mean, not everyone's getting a loan just because, they want to go on holiday or something. There's a lot of people who have medical bills. There's a lot of people who have, they lost their job or something and they need something to tie them over for a few months. Some of it's, very serious.
So Altron FinTech has a strong footprint in enabling credit providers with technology. How are modern credit solutions transforming the way businesses assess and offer credit to their customers? I think now we're talking more financial inclusion. In what ways are new credit models changing how businesses decide who gets credit?
Yeah, so I think in that space specifically, things have gone a lot more non-face-to-face, or that's the way they're going. Traditionally, you had to go into a bricks and mortar shop, swipe a card, do a transaction, or just, fill in a bunch of paperwork and spend hours in a line, right? So that was how it used to work. But geographically, the people that have the money to lend and the people that need the money to borrow are not necessarily in the same place, right? So as time has gone by, especially with, a lot of this internet kind of online functionality and whatnot, that trend has also kind of gone in towards the micro lending space. So the information that you have on the person that actually wants the loan, you can get it via credit bureaus, you can get it via other data that we have enriched on our end, you can get it, in a number of places. But the entire idea is to kind of bundle this all together in such a way that it reduces the level of effort required to understand the quality of the person getting the loan, like we were talking earlier, and also the ability to issue the loan and disperse the funds in a non-face-to-face environment. So, as a practical example, you have a person looking for a loan, a borrower, and that borrower needs to get access to funds, but they are in, let's say, Pretoria, as an example. The person that's giving out the most competitive loan at this point, or the person that he trusts, that he's had maybe business with before, is in Vereniging. I'm not really good with geography, so those are the two cities you're getting. But for him to travel out to Vereniging with the cost of petrol and all of these different things, it would have been, it adds to his friction. Let's call it friction. It adds to the friction of getting this money that he needs right now. But with the systems that are kind of in place today, there's the ability to either phone in or email or go online, apply for it, make contact with this guy. We put them in touch with each other, and then this merchant then can give a loan, and even the funds can be dispersed all while over the phone, depending on what mechanisms you choose.
Right. So now, when we're looking at the evolution of payments and the growth of technology these days, AI is a buzzword, and we can argue that it's always been there. It's just gotten much better now, How is Altron FinTech helping financial institutions move beyond traditional credit scoring models to incorporate alternative data sources for better decision making?
So AI, like you said, is a buzzword, and it's a very, it's kind of ubiquitous. People love to use it for every kind of result or response, right? Or they try to just pump it into every small place that they want to make some kind of improvement. But the practical applications kind of really need to be given some thought. So we're taking a very practical approach to the way we use AI. We're probably going to use it in two specific places. We want to, number one, drop AI and machine learning into our document processing for bank statements. So today, on the onset of a loan, and I'm speaking specifically to practical scenarios, not just like a kind of pie in the sky thing. So if you want a loan today via some of our LMS programs, you actually have to get documentation in. That documentation is a bank statement, a pay slip, a few other things like that. But it's quite onerous to read a PDF document which is scanned in, to understand it, to pull data out of there, and then to use it in a meaningful way. Traditionally, this would have been up to the actual person on the other side of the desk. So, one of the administrators or the people giving the actual loan out, or one of the employees doing it, right, for the person coming in to get the loan. So that is one place we are using it. We want to actually be able to take all of those documents, break it down, understand all of the content of that document, make decisions on what's in that document, and provide like a holistic view to say, okay, we've done all of the work, we've understood it, and we know what's in these documents and these bank statements and pay slips. This is the actual result of it, and you can then use this information to make a decision. We can take it one step further where we make the decisions for them, but we believe that that's kind of maybe one step too fast, simply because the merchants like to make their own decisions about ultimately whether to give the loan or not. We want to rather strip out the hard labor of going through all of these documents by applying AI to kind of generatively learn the differences in these docs. And also, when you look at documents, some of them are scanned. Some of them are pictures taken. Some of them are printed. So we need to get into a point where you can simply take a picture of something and it's able to deal with all of the inconsistencies and still come up with rich data that's accurate. So that's the one place we're using it. And then we also want to make use of it in some of our support desk scenarios. So when people call in, we want to be able to understand their stuff, understand their voices, use natural language processing, process all of that, and then give them the responses they need in terms of whatever support they're asking of us, whether it's a settlement report, whether it's my terminal is not working or something's wrong with my system. We want to take out that kind of hard, or let's call it mundane labor out of the support desk, and then that leaves the support desk to leave, our current call center and support desk can deal with the complex issues rather than the kind of straightforward things that can be processed by this.
So we are simplifying those fintech complexities.
Yeah, somewhat.
So with all that much technology that you are including, I cannot help but think about the compliance behind it and the risks associated with using so much technology, right? One of the biggest challenges in lending is balancing risk with financial inclusion. How can AI-powered credit models like the ones Altron FinTech could develop help business extend credit to previously underserved markets while making risk effectively or while managing risk effectively?
So typically, there's always like a balance between risk and agility, right? So your agility will go up, your risk will go down. Okay, so, or rather it's a direct relationship. So essentially what we're saying is the faster you are and the more agile you are, your risk goes up in terms of your business. So the faster you run your business, the more efficient you become, and the more, you push for like higher volumes of loans or whatever, your risk will go up. So the trick with the AI kind of thing is to take all of those risk and pain points that might happen because of this, and to, number one, make faster decisions. So use the actual machines to do the heavy lifting so that whatever risk parameters you have, you apply them in there and it removes that risk. The compliance side of things is more along the lines of what data you're exposing or what data you're kind of putting at risk internally because you're using models to look at it. So what are you allowed to share? What are you allowed to put into the public eye? What are you allowed to, like POPI, PCI, all of those things. That's where the kind of compliance thing falls into space. On the loan side of things, giving out loans, there is risk and compliance in terms of whether you're being a reckless lender. All right. So the way to look at that is based on how exposed or how credit exposed this person is, and whether or not they qualify for a loan based on that. So you kind of have to work all of these things into the AI models, but it's actually just more a decisioning model. So it takes all of this information and it identifies whether or not this person is a good debtor or not, whether you're even allowed to give them money or not, because they might fall into a high risk or they might be over indebted. So you don't want to over indebt someone to the point of where they can't pay. So that's part of how the compliance framework works. I'm not an expert in that. I mean, legally, I just kind of, you pick up things along the way as you work in the space. But the AI models there will just be there. Again, it's more to do the heavy lifting instead of having all of those manual kind of steps in that process.
And you're right. So there's a very thin line between inclusion and being a reckless lender. It can just easily go south. So now we're talking about our favorite subject here, customer experience.
Sure.
We are very customer obsessed here. So consumers today expect faster, more personalized lending experiences. How is Altron FinTech using technology to streamline the credit application process and enhance customer experience? Bearing in mind that not everyone is so tech savvy,
Sure.
How do you make it easy for our customers?
Sure. So I think you need like multiple options depending on what the use case is. So there's no silver bullet or one shoe fits all. I think that's where you start out. The technology itself has to be set up in such a way that all of the backend stuff is ubiquitous. So you can have multiple presentation layers, but the backend remains the same. So we kind of, the magic happens there. The front end, the different presentation layers can be whatever we want it to be. In terms of practically what we're trying to do for the customers, or the experience is you want to have, like I said, multiple points of entry. So depending if it's a return customer that's very lightweight, you want to have a small little lightweight app that gives them a very quick turnaround time in terms of, because it's a trusted customer already. They're just getting another loan from this person they've gotten before. They have a lot of their credit details. There's a lot of things you can kind of, I wouldn't use the word bypass, but you know already. So in that instance, there for returns, you want to kind of have one layer or one flow, if you want to call it that, one workflow. But for somebody brand new, depending on where they are, where they're located, depending on the risk profile of that specific merchant and who is servicing, it kind of changes things, right? So, do they need approval first? What level of approval can we approve on their behalf? There's all of these questions come into play. And the idea being that we have to balance the user experience and the speed. So the friction with the risk. And as time goes by and as we get more information to learn from these things, we can apply a bit more and more kind of efficient things to make it less friction, right? Because the more data you have, the more you understand, and the more experience you have, the more like friction you can remove from the system.
All right. So, as the landscape of credit continues to evolve, what innovative approach is Altron FinTech using to create smarter, more personalized lending experience for customers?
So we're going with customer-facing initiation. So that's like a big thing that we're kind of working on now at the moment. Previously, the merchant would be the one initiating the loan. So because at the end of the day, it's their money, so they have to be the one to generate the loan and give out the loan to the borrower. All right. So we were moving towards a scenario where the lender initiates, so it's almost like a request for the loan. So it's a pull rather than a push, or at least that's the experience. So we're moving towards that kind of setup, and there is a web loans thing, but we're kind of moving that towards an API layer, and we want to move into the app space in that environment. So the idea being that the lender can choose from a number of the borrower can choose from a number of lenders via an app, and then request a loan, and then that goes out almost to the market and comes back. So there's places we're playing around in that space, but it's all we're focusing on the consumer initiation now. For years, we've been focusing on the merchant, and we will continue to do that. But our new journey is leading us towards focusing on the end consumer. And our business was traditionally always business to business, NewPay to the merchant business. But now we're trying to develop a pipe into the end consumer so that we can put the end consumer in touch with other businesses more easily.
Right. So now, as much as we can talk about compliance or all the regulatory trends, we cannot leave cybersecurity on the side, because it all links back to cybersecurity, fraud detection. As much as we love to use the technology, but there is always a risk. The risk is always great. How can real-time data analytics help lenders to prevent fraud, and what role can Altron FinTech play in this?
In terms of the fraud and cybersecurity, I think we need to kind of split that a bit, right? So cybersecurity in terms of like breaches and what have you is one layer. All right, that's about authentication, knowing who your customer is, identifying the customer in real time, and making sure that the person access to your systems is kind of secured, right? So that's one layer of things, and we handle that from our end. So our systems that we provide to the end users, we're adding multi-factor authentication, we're adding, it's all behind firewalls and behind our zones in our space, right? Because it's all hosted by us. We don't host externally, right? Or rather, we don't host in the environment. So we secure the entire environment. That's a cybersecurity question. The second part of that question, and that's why I split the two, the second part of that is more along the lines of fraud and how real-time data plays in terms of fraud. So fraud, in this space specifically, is along the lines of people impersonating others to get loans on their name. So, somebody comes in pretending to be you, goes to the merchant, says, "This is me, that's my bank account," and pretends to be you when they're asking for that loan. They get the monies, they leave, and when it comes time to collect, that account either does not exist, or the account does exist, there's no money in there, or there is money and then they debit the wrong person, right? So that's the kind of fraud that they're going to try and push in order to get. That's like the most common thing you're going to see. And the way that we've done, there's a number of ways that the technology does that. We were talking about the bank statements earlier. First, built into that, there's there's like real-time processing of that document to see is it a real or fake document. So it kind of starts out at that point. Then it's a question of an ID verification check to say, okay, this is your ID number. Let's check your PEP and PUP status. Let's see who you are. You say you are. Is the photo that comes back you? That kind of thing you do. Then there's AVS checks to check, okay, is this bank account a real bank account before you even start along the line, right? And then depending on what loan mechanism or what debit mechanism you use, some go from highly secure, and then others less so. But there's a cost range to these things. So as an example, let's look at the cream of the crop. The cream of the crop is probably like debit check. And in that scenario there, all your transactions or all your debit mandate registrations are authenticated. So you as an end consumer have to have access to either your bank account your card and PIN when you're swiping, because that's a debit check, or in the example of like a TT1, you as a end consumer have to have access to your app, which actually approves the mandate when you do that mandate registration. So the last leg of the loan that actually registers a mandate against an account to collect. That's kind of how the technology all plays in that, right? That's the preventing of the fraud, because the fraud means nobody's going to give out a loan if they don't have a repayment mechanism. So, with all of these things, these are all of the different tools in the toolbox to use to kind of reduce the rate of fraud.
Right. Thank you so much for joining us. I've learned so much from you. I speak the same language as you now.
Mm-hmm.
So whether you're a financial service provider, a tech enthusiast, or just simply curious about the evolution of payments and digital transformation, where your money is going, where it's coming from, this podcast really is for you. So hit follow, subscribe, like, share, as we explore all things Altron FinTech, and we are powering payments everywhere. So we'll catch you in the next episode.
Thanks, everyone.